Welcome to the Money Orchard podcast with Dennis Zaderaka. Investors have a problem. You don't want to lose money and you don't want to run out of money. You want a future free from financial worry. But there are thousands of complex investment ideas. Most don't succeed. How can you know what to choose? In this podcast, we turn financial strategies into a story that will change how you invest. Join us in this story and see the financial world in a new way through the eyes of an expert.
Hello and welcome to the Money Orchard with Dennis Zaderaka. Today, I'm excited. We're going to be talking about the orchard. And I love the title of this podcast. Dennis, how are you?
I'm very good.
All right. The Money Orchard. I think that is a beautiful picture that just comes to mind, that it just kind of pops there. And I know that you came up with that, correct?
Yes.
All right. So I'm excited to start this podcast with you, man. I hope you're ready. You ready?
Okay. Yep.
I can feel the excitement through the microphone. Okay. So Dennis, why did you decide to use the orchard as a way of explaining investing and investments to people?
Because a lot of the language we use in investing is very abstract and very unconcrete. Mm-hmm. And let me give you one example, in terms of how the language shifts around. When I started out back in 1980 with Kidder Peabody, when they sent us to New York and we were trained, we were called stockbrokers. Mm-hmm. And then pretty soon we became called financial planners, and then we became investment consultants. And now everybody is a wealth manager. The funny thing is, it's the same thing, same job, same work with a different word. Mm-hmm. So nothing changed. It's just the word changed.
It's like rebranding or something, right?
It becomes confusing about, who's what. And I think people understand that as like, why is this? And I think people deep down know it's like, they're doing the same thing as they did 30, 40, 50 years ago. Mm-hmm.
And that's a problem, right? And if people are doing things the same way that they've been doing for the last 30 years, there's usually either a huge success story there or it's not going well, right?
Well, yeah, exactly. Let me give you another example of again, what I'd say is language, because I think a lot of the problems with investment, being able to make it good investments, is basically a problem with language. Mm-hmm. I'll give you another example, is wrap accounts have been around since probably about 1985 or so. Actually, they started at E.F. Hutton back in 73, 74, and I actually worked with the guy who created that product.
Did you say wrap accounts?
He created wrap accounts at E.F. Hutton.
Okay.
And so anyway, we don't need to go down, explain too much about that guy. But wrap accounts, when it started out, was a good thing. But then everybody started doing it, and then it became kind of a bad word. Oh, I don't want a wrap account. So they changed the name to fee account. So now what we have today are fee accounts, which are exactly the same thing as wrap accounts were. And
I didn't
so
know
it's just a shifting of the language.
Yeah.
And so you can see why that's kind of confusing to the clients, because the word almost becomes meaningless. And so let me go one step further deeper into that. Buying a company or buying a stock share in a company is one level of what you do. But then when you start moving over to indexes, that's an abstraction. Then when you go into options, that's an abstraction. And then you go into futures, and things become, less clear and less clear, or let's say totally unclear and confusing.
Yeah.
So when you ask me the question, why did I create the orchard? Because using the orchard in this tree example of an apple tree and then the apples for income, all of a sudden you can picture something real in life, you can connect in real life, and you know how an apple tree works. Mm-hmm. And so when you say you have your money making money, that's your portfolio, but it's actually another clarify the word. Portfolio is your money making money. Now, technically we call that capital. Then the tree is the capital or the money making money. The apples are the income.
Okay.
And so all of a sudden, everybody can understand, I'm not trying to collect trees. Wall Street wants to sell me more trees, but I don't need more trees. I need more income.
Okay, yeah.
And so now you can see a picture of what it is. And now in real life, when I talk to people, I talk to them about, now, if you had this kind of tree, would you cut it down to buy a car? And people physically react and say, no, that'd be stupid.
Yeah.
Well, no. Well, why? Well, you wouldn't get any more apples. I said, well, don't we do that with our money all the time? So all of a sudden, you can see that I killed the tree, I don't get more apples. It's like your making money is different than the income you get off the tree. The income's okay to spend, just don't cut down the tree. So basically, if you have this kind of orchard, protect it.
Yeah, absolutely. It reminds me of probably one of my favorite books of all time, which is The Giving Tree by Shel Silverstein. Are you familiar with that book?
I am not.
Oh, it's wonderful. I should just send you a copy because I just believe in it wholeheartedly. It's a children's book, to be honest with you, but it explains kind of a friendship between this tree and a boy as he's growing up, and he's taking different things from the tree as he needs things, right? So the tree gives him all the apples to go sell for money because he wants money, and then, well, he needs a house, so the tree gives him all the branches, and then he takes the trunk of the tree to build a boat to sail away someplace, and he comes back and all that's left is a stump, right? And he's used all the resources, not being a good steward, in my opinion, but the tree is still there and happy to see him. It's a wonderful book. Anyway, but that's kind of what you're talking about, is that people are willing to sacrifice all the fruit that they could possibly be getting for the decades that they have to live still for a pleasure now, or a necessity. And I'm using air quotes, which you can't say on a podcast, but a necessity now. So I love the picture of this.
And so what happens, it's a simple explanation, but it's not simplistic. And let me connect it to something else.
Okay.
E equals mc squared, Einstein. E equals mc squared is very simple. But what it explains is a very complex scientific explanation of the world.
Yes.
And so I don't know that I don't know. I actually know I'm not an Einstein. But
me neither. We're in good company, brother.
But I think using the orchard story actually helps people understand, like, oh yeah, it's about the income. I'm trying to replace my income. And so the goal is if I have these kind of trees, is if I have big enough orchard that the apples I'm getting someday, or maybe even right now, but the apples that I'm getting equal the number of apples I get when I'm doing my job or work. That's when I'm financially self-reliant. Mm-hmm. And so that's the goal. And I describe it, it's really a struggle between your present lifestyle and your future lifestyle. I want to live good now, but I also want to live well in the future.
Yeah. Yeah.
And so when you can see, so the idea is I'm creating this, I don't know, the mechanism, if you will. I mean, basically the money making money is to reproduce my income. So then I have time freedom, I just have freedom to be able to do things because I don't have to always be working for the money.
Yeah, absolutely. So what other kind of things are you trying to explain with this orchard story to people?
I can't go all of them into one podcast because we're going to do many of those. Mm-hmm. But I will say a couple of them is I really want to say is, one is the thing that I learned from the orchard is I kind of knew it, but it really kind of like banged me over the head with it, is when financial advisors talk about what are your goals, education your kids, is it retirement, is it charitable giving, is it helping others, what are your goals? And what the orchard really taught me was there's only one goal. It's as much income as I possibly can get. Mm-hmm. And if I have as much income as I can get, then I can meet all the needs and everything that I want to do because I have the income to do it. So it almost doesn't matter what those other goals are. I mean, it is important to them, but that's not the goal. That's why I'm doing it. The goal is as much income as possible so I can do those things. Mm-hmm. So that would be one thing that really kind of jumped out at me while I was developing this, is like, we're making the wrong focus. We're just helping people buy trees and collect trees and more and get more and more and more. And it's like, at some point, it's the use of the money that's valuable, mm-hmm. not just having it.
Yeah, absolutely. And that's what makes people, want to achieve those different goals, is that whatever the emotional tie to it is. So if they want to provide, schooling for their grandkids, well, that's great. That's the driving force. But the actual goal is, like you said, to make them enough money to do that and the other goals that they have. So while they, need to be focused on why they're doing what they're doing and why they're, protecting that orchard as fiercely as they should be, those are the good reasons, those are the reasons to do it. But to have more growth, right? I'm assuming, if I'm speaking this, if I'm saying this correctly, Dennis, to have more growth and more sustained growth.
It's you want growth, but the growth again is to continue to grow so you have more income. The growth is the means to my actual real goal, is having the income.
Yes.
When or if I retire, then I have money to live just like I lived while I was working. So the trees are just the means to the growth of the trees, and adding more trees, which we want to do, is the means for ultimately for the income. Now, that's I'm going to go back to it. Is we live in the present, and the orchard is for most of us is still in the future. I haven't quite arrived there yet. Mm-hmm. Mm-hmm. So it's how do we get there? How do we basically then the other part is protecting the tree. And once I've got a little orchard, I want to protect those trees and have them grow, but then I want to be able to maybe get some more trees. But let me talk about the trees a little bit, because essentially the other part of the story is, it's, again, going back to simple, like the E equals MC squared. Simplification is there's only 3 places you can store money. Okay. There are 3 things you can do with money. One is you can loan it to somebody and get interest. You can own something that's growing and it produces apples. Mm-hmm. And the other is protect. So there's 3 functions of loaning, owning, and protecting.
Okay.
Now, what I just described in a different way is loaning is the banks. And I'll tell you a story about that after we're done with this. The loaning is the banks. Owning is something Wall Street sells you parts so you can own part of a good business. Okay. And the third thing is protecting is the insurance industry. And you need to have all 3 kinds of trees, but those are the only 3 places you can store your money.
All right. So break them down for me, would you?
Okay.
So the first tree, loaning.
Well, the first tree is like, that's where you save some money, you have some money, and now I want to make my money, grow. Is I can loan it to somebody and I would get interest. In other words, it's sort of like you're renting money to people. Mm-hmm. Now, here's the funny story I was going to tell you. So at one point, I worked at a trust company and did financial classes for the bank customers and for the trust customers. And I was sitting in a meeting, and they said one of the officers said something about we don't like CDs, and we don't like deposits. And I'm saying that what? This is the bank. What are you talking about?
A bank that doesn't like money.
He said, Dennis, we have to pay money out when we have deposits. Mm-hmm. We don't like paying money out. Okay. And so that's where the light bulb went on for me, is the purpose of the bank isn't so you can have a checkbook or a savings account. It's so they can make you a car loan or a home loan. They want to make loans. And I learned that they were very, very careful to balance the deposit portfolio to the loan portfolio to match it up. So if they don't have any good loans, they will drop the rate so they don't get as much money coming in. And if they have some good loans coming on board, they'll raise the rate, let's say 1/4 point, and the money flocks in like bees, because I can get 1/4 point more than I get down to that place. And so that's in the loan category, understanding this is what a bank's purpose is to make loans. That's how they make money. Now, Wall Street, the other area, which is basically where you can buy shares of a business, their real purpose is to raise money for companies. Mm-hmm. And sometimes, not sometimes, people I think misunderstand it, is their primary purpose isn't to help us.
What?
Their primary purpose is to raise money for other businesses. So when, Bill Gates does Microsoft, he's got a bunch of shares.
Yeah.
But he doesn't have any money. So he needs to sell some to the public so he can get some cash out of his company. Or Jeff Bezos with Amazon, and you could go on and on and on. So that doesn't mean that it's wrong. We just have to understand this is their business. That's their goal. And when my goal and their goal match, it's a good fit.
Mm-hmm.
But I always have to understand is they're to make loans, and that's why people do too many loans, get into, the 2008 crash.
Yep.
And Wall Street is there to maybe raise capital for businesses. And then the insurance industry, again, the protection part is we need to keep some of our money protected, but we also have to protect our trees. And so maybe sometimes we have to buy some crop insurance. But ultimately, any farmer, whether he's growing wheat or, whatever, they're going to buy crop insurance because the hail can come and destroy my apples, or a frost can come when the blossoms are still in the spring, and now I have no apples this year, so I need crop insurance. So that's along the line. I mean, so those are how the three things kind of work together.
Gotcha. So give me an example of crop insurance. What would that look like?
All right. Okay. One crop insurance would be treasury bills, treasury bonds, where the income is guaranteed, is predictable. And you can buy. You used to be able to buy a 30-year bond to say had 9% yield for the rest of your life. Why would you want to protect a certain amount of money so that I got the steady income forever? Mm-hmm. Now those rates are not there anymore. So the other way to people can have protected money is there, and I'm going to be careful because this becomes a bad word. There's some good ones and bad ones, but annuities. Mm-hmm. So you can buy annuities that guarantee you an income for the rest of your life. Some are good, some are not good. So you got to be careful. Annuities, like saying fruit. There's all kinds of fruit. Somebody like, somebody don't like. Some's not good. Some is good. So that would be another way of approaching that. Now, Social Security, when people are at that age, you don't own anything, but that actually virtually is an annuity by the federal government. So that's protected money. It continues to go there, a little patient protection, and so on. If you have a pension, that's protected money. Mm-hmm. So that's what I mean by the protection area is basically I've got an income that I can count on. Nothing can hurt it. That's what I mean by crop insurance.
Got it. So let me ask you this. When you are introducing this to folks, what is their reaction? I mean, I know you've got a bunch of clients and the last few prospects that you've introduced this concept to, how do they react to this?
Let me give you one example. So this is some people that were really kind of long-term customers, and he was a doctor, and his wife, they would come in and talk about their finances, and they were, we're talking about they have $2-3 million. So I mean, they're not, they got some assets.
Yeah.
But she would sit there and never say anything, nothing, just quietly, and then walk out, saying she's a very nice lady, say hello, good, and then walk out, never ask any questions, never said anything, whatever. So when I showed her the orchard presentation, because I have a little drawing that we write on and draw that out, she all of a sudden perks up and starts smiling. She says, "This isn't as hard as I thought it was."
Nice.
And now I later on turned out, because I actually learned and got to know them, and they became very good friends. But I later found out she was an artist. Mm. And so the picture communicated to her in the way that words and numbers did not. Mm-hmm.
Yeah,
and here's
absolutely.
what I say about language. For an industry that based on numbers, supposed to be real precise, the language is incredibly fuzzy.
It's terrible. Absolutely. There's a lot of confusion out there.
Yep.
So I know that we're, the podcast is nationwide, and we're hoping for a great audience, and we're hoping that people share this podcast because the ideas that you're going to bring forth, the visual pictures, right, that you're going to be bringing to the surface here are really, really important. And just like you said, this client, she learned a different way. She was wired a little bit differently. And I think that this hits all the buttons for people that do understand numbers, and then those that maybe are a little bit shy of learning the numbers but understand the concepts. So I think this is great. You and I have talked before that you also kind of help this story kind of change and be told to kids as well, right?
Well, because children know what a tree looks like, and they know what apples are, mm-hmm. and they so when you explain to us that this money is, I would describe there's two kinds of money. There's money, your money making money, that's what we call capital, mm-hmm. or principal, and there's the income. And so it's permissible to go spend the income, but don't cut down your tree.
Yeah.
And let me go do one other one. Is there's a what something costs, and then there's the real price.
Yeah.
And something might cost me, let's say I buy something I really want for $500. It cost me $500, but the price is all the money that money would have made for the rest of my life.
Mm-hmm. Yeah. Wow.
And so all of a sudden you look at that and say, do I want a tree that's going to give me apples forever, or do I want this thing for $500?
Mm.
Either decision is fine. You just have to understand as I'm cutting off at least a branch of the tree.
Yeah. Yeah.
Might be a big branch, but I'm cutting,
Yeah. No, I mean, it's a great visual. And I mean, I know that you've been telling this story for a long time. How do you use it besides the one-on-one meetings? What other ways do you use this story of the orchard?
Well, I've been teaching financial classes at companies since really about 1980. And the most recent one I did was I did a class, and the guy came up to me and said, "Could you do this for my people?" And I said, who are your people? He said, "Well, I'm a commander in the Army Reserves, and
Nice.
We have an emphasis on the whole soldier, which would be, obviously you got to be physically fit, and you got to, do your skill, whatever you're trained to do."
Mm-hmm.
He said, "But we also emphasize, mental health and, so on, but also financial." And he said, what happens is if a soldier gets into financial difficulty, they'll lose their security clearance, and then they're immediately discharged.
Mm.
So
Wow.
he wanted me to come out and teach that to he was actually a commander of a large, I think it was division.
Mm-hmm.
I think that's what a lieutenant colonel commands. And so I got a chance to go out and do this with the soldiers, and it was really. I mean, I enjoyed it thoroughly, and I did not get paid for this. I did this as just as a volunteer. And anything,
Mm-hmm.
Actually, as much we can do to support these people is a good thing. And so that was exciting. But the interesting thing is, I have people that have seen this, say 5 years later, come back and start talking to me, not in financial language, but orchard language.
Nice. That's awesome.
So that means it helps people understand what the heck is going on. It actually, it helps them understand what's going on, but it also I describe it as a decision-making tool. It helps you see things more clearly.
Yeah.
It's like, and maybe if you see things, I already have enough of this kind of tree. I need some more. I don't have very much of this kind of tree, so I need some over here.
Mm-hmm.
And so a lot, let's bring it down to the financial language. A lot of times people have too much in the owning tree and very little in the loaning tree, and sometimes almost nothing on the protection tree.
Yeah.
And you need a balance between those. But when you lay it out, there's only three choices, and here's the category. I don't care. There's lots of varieties of things you can put in there, but you now know the major areas.
Yeah. Yeah, and I think that I love the fact that you've gone and spoken to folks in the military, because most people that go into the military go in right after high school, and we do not equip high schoolers anymore. Even in my day, way back when I was in high school, we learned about finance a little bit, but it was mainly, here's what a checkbook is, here's how you balance a checkbook, here's what your withdrawals and your deposits look like, here's how not to go into debt in your bank account, right? So that's, or not to overdraw your bank account. But we really weren't taught about debt in general, or credit, or the orchard in general, with just being able to save and then protect and then, investing. We weren't taught any of that stuff. So you get somebody that leaves high school, goes into the military right away, and all of a sudden starts getting a steady paycheck that they've never seen before. Oh man. I mean, they can get themselves in a lot of trouble very, very quickly. So I love this story because of the fact that it can speak to anybody. Anybody can adapt it to what they're going through, because it makes sense. So I want to ask you, we're getting low on time here, Dennis. Who should be listening to this podcast? You've got a large audience. Who should be listening to it, and what are they going to learn?
I would say this is a broad audience, but the people who've already built an orchard and want to protect it, or people who've built an orchard, want to protect it, and then ultimately transfer it or pass it on to their children. Mm-hmm. They need to be able to teach their children how to take care of the orchard.
Oh, absolutely.
The history is full of examples of very, very wealthy people, and their children dissipated the fortune in just a flash.
Yeah.
And so teaching your children to take care of the orchard, I'm going to leave them. Now, the others, everybody has maybe a little small orchard. They want to grow it. So basically, how to keep from making mistakes, how to prepare the soil if I'm going to plant a tree. So there's a certain amount of, if I'm growing a crop, you got to dig a hole and prepare the soil and for the tree that you're going to put in there. And then there's people who want to have an orchard. I mean, basically, it's like my goal is really to help people protect the orchard they've created. But on the other hand, I want to take people, say, like my children, and say, this is a good goal for you. Someday, you want to buy all this stuff, but someday you want to have your money making money, because your health and lots of reasons you might not be able to make the same amount of money as you're making right now. Mm-hmm. And then, some are even maybe more precise, is just people who want a clear path that they can figure out and follow with confidence.
Mm-hmm. Well, Dennis, I'll tell you what, I wish I had you back when I was in my early 30s, because my wife and I made a financial decision that was just horrendous, and it was at the worst possible time. So we leased a minivan. So there's two things right there, leasing and a minivan. It was terrible. And the fact that, so the payment was around $640 a month, which is insane, way over what we wanted to budget for it anyway. And it happened to be a 2008 minivan. So you can imagine 2007, 2008, 2009 timeframe. And I went out and leased a very, very expensive minivan for no reason. Anyway, but we're to the end of our podcast. I'm excited to get into this with you. I'm excited to hear more stories and learn more about the orchard. And I want to thank you for your time today, Dennis.
Okay. Thanks, Eric.
You bet. And thank you all for listening to the Money Orchard Podcast with Dennis Zaderaka. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Dennis comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. Again, thanks for listening today. For everyone at the Money Orchard, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Call Dennis to ask any questions about designing, building, or protecting your financial orchard. The Money Orchard Story is a decision-making tool to create your future free from financial worry. An orchard symbolizes your money making money, but you need to watch out for obstacles and dangers to financial success, because life is full of risk. Thank you for listening to the Money Orchard Podcast. Click the subscribe button below to be notified when new episodes become available. Call Dennis at 630-665-9964 to ask any questions about designing, building, or protecting your financial orchard. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice for your specific situation.